I made £1 million in 4 days. That was 1992. I was in the thick of the short sterling pit. The UK Chancellor thought it'd be a great idea to peg the pound to the Deutschmark. So their economy was growing. Our economy was shrinking. And interest rates kept creeping up. And eventually they got to 15%. They had to force the pound to stay in this range with the Deutschmark. I was making like 250 grand a day. I was only like 23. It was crazy. I had a backer who gave me unlimited money, so there was just so much volume. If you knew what you were doing, it was almost easy. It was like free money. I was constantly swinging the bat, looking for 5-6 figure sums. So it's pretty crazy. Yeah, I made £1 million in 4 days.
What are your thoughts with patterns? Because one thing people say in terms of patterns is the pattern's always the same and it can't be that easy and they're too easily recognizable. As someone who uses patterns in your analysis, how long have you been doing that? Has there been longevity in that?
Good question.
The number one podcast in the trading space, the fastest growing, and that's thanks to every single one of you. Profitable trading really boils down to two things: opportunity and volatility. And that is why the podcast has partnered with Market Journal. Because between the years 2016 and 2020, the amount of opportunity that was available, as well as volatility to take advantage of, was at the highest it's ever been. And all of that really pointed towards one man, President Donald Trump. During his period in office, all it took was one tweet, and that would present so much volatility, and the right traders would take advantage of that and would create their record P&Ls. And that is why those same traders are so excited for this new period between 2025 to 2029 when we have President Donald Trump back in office. Now, Market Journal is going to give you the weekly insights you need across crypto, Forex, futures, and the stock market. So regardless of what happens, whether it's a tweet, a particular stock running up hundreds of percents, whatever volatility and opportunity that Market Journal can identify, it is going to share with you every single week. So you can purely focus on taking advantage of those opportunities and taking advantage of that volatility to create your record P&L. Now, Market Journal is absolutely free. All you do is click the link in the description below, put in your email, and you will receive key updates on the markets every single week. So you are always up to date with what's going on and ready to execute when the time is right. Links in the description below. Thank you for enjoying this episode. Let's take a break for a minute there, guys, because I want to let you know about one of our sponsors. Alpha Futures is offering the best one-step evaluations in the industry. And in the month of December, they have no activation fees. They have the largest end-of-day based drawdowns in the entire industry, with up to 90% profit split and lightning fast payout speeds, and offering advanced and standard accounts to fit your needs. Alpha Futures is truly offering the most elite plans for the lowest total cost to entry in the industry. You can start as low as $79. And thanks to the podcast, using code RIZ, R-I-Z, you can get 20% off any of those challenges. Go to the link in the description below. Now let's get back to the episode.
Welcome everyone to the Words of Rizdom podcast. We are back once again and still the number one trading podcast in the world and the fastest growing thanks to all of you and our incredible guests. Make sure you hit subscribe and hit like right now because we're bringing you the very best traders in the world. Talking of which, today we have a trader who has a career spanning over 37 years so far and still going, which is very important, and still going. He started off at age 19 on the London Stock Exchange, trading options. Shortly after that, going to the London International Financial Futures Exchange, the live floor. Thank you. I needed the help. But as you can see, we're here with Jason Sen. Thank you for being here, man.
Pleasure. Thank you so much for inviting me.
It's my absolute pleasure. I know we've been talking for a little bit of time because I know you don't preside in the UK at the moment, so we had to wait until you were here, which I'm very happy for.
I've travelled 6,000 miles just for this.
I would love to know that was true, but I know it's not. But I'll take the honour anyway. But one thing I want to ask you off the bat, normally we'll go straight into your journey, but something that really stands out to me is like a lot of traders have short careers. Right? A lot of people, they can't handle the markets for a long period of time, but you are 37 years in and still going. What is it about trading that, or what is it about your passion for trading that allows you to keep trading even after such a long career?
Good question. I think everyone who's involved in financial markets will admit there is a bit of an addiction. I can't imagine getting up in the morning and not knowing where's gold, where's the dollar, where's the yen, it would just be weird to me. So I don't trade actively that much anymore. I'm actually trying to stop myself trading because I'm trying to reduce stress in my life and become semi-retired. But I love analyzing the markets and sending out my signals and stuff to my subscribers. I don't think I could not do that.
So do you think it's the understanding of what's happening in the markets, and that generally, because one thing that I find fascinating about the markets is like once you understand what's happening in the markets, as a byproduct, you end up understanding what's really going on generally in the world as well as a whole. And I think that's one of the major benefits is even if you're not a trader, as long as you understand those charts and you understand then what's going on globally, a lot of what we were just talking about before we went on air in terms of like the emotions in the news and emotions in politics, etc., kind of gets simmered down because you understand more so, okay, what's actually happening? Why is the cost of living so high? Why is, the impact of, say, immigration happening on the economy and so on? So therefore, it just really simmers down because you have a greater understanding than just the average person who doesn't really understand the markets at all.
That's actually a really good point. I suppose for people who don't trade, they probably can't imagine going through the week without following the news, switching on the news, whatever, on your phone. So for me, it's financial news. And you're right, it does have a bearing on the economy and geopolitics and everything else. So, I can't imagine not knowing where inflation's going or what inflation is, at least, that kind of thing.
What was it about trading that first got your interest? Because you started very, very young. Like you were on the stock exchange at 19. So I'm guessing the interest might have started slightly before that at least. But what was it that first sort of piqued your interest with trading?
Money. I was a teenager. I wanted to, go out and get a good job and earn some money and buy a nice car. My dad was actually probably one of the original at-home day traders.
Oh, really?
So he actually got an office, and it was really weird because he had an office and he had a desk a bit like this, a phone, and that was it, because of course there was no laptop in those days, no cell phone. And then on the wall, he'd have graph paper, and he traded the FTSE. So he'd have a line chart at first, and then he heard about bar charts, so he'd have a bar chart, and he'd literally put a line on there every day. And so he had this FTSE chart on the wall. So I'd go and see him after school. I'd be like, what's going on, Dad? And then he would just sit there. I think there was some sort of Oracle thing there where you could get prices that were delayed, but usually you'd have to pick up the phone and say, hi, right, where's the FTSE now? And you put your order through on the phone. So it was obviously very primitive, but that was what interested me. And then I remember once he made a big sum of money. So obviously that was amazing. I mean, he lost big sums of money as well. Don't think he ever really made any money, but he loved it. And that's probably where my passion came from.
I can imagine, actually. It's a very unique story because a lot of people, they don't have that direct reference. It might be someone they know, or especially nowadays, it's more social media stuff. But especially back then, to have that direct sort of inside the household reference is incredible, especially being able to sort of question and see the charts the homemade charts. In comparison to today. And I think this is why I love having traders such as yourself on, because it's, especially if you've traded throughout the eras as well, in terms of from that, seeing the progression of technology and how trading itself has changed and how accessible it's become versus what it used to be. But interesting thing you said there in terms of he made some money but lost a lot of money and in the end probably didn't make so much money. From your experience and from your career so far, is that something that you've seen a pattern of? Like a lot of traders find themselves in that position?
Yeah, I think most people lose money. And I'm not saying I find it easy. I absolutely don't. And I still make silly mistakes. I can teach anyone how to trade. I know all the tricks and all the hacks and what you should do and how to control your psychology and trade management, account management, and I know I've got really good technical analysis techniques. But am I the perfect trader? No, absolutely not. I'm just human and I do stupid things and I get greedy and I run positions too long and sometimes I don't use a stop loss. So I'm not the robot that I should be.
Have you met anyone in your career who has been that robot?
Oh, that's a good question. I have met phenomenally successful traders who just can sit down and pull huge sums of money out of the market. In fact, one of my very, very close friends, who is my son's godfather, he was one of those guys, doesn't trade anymore. And I sat next to him in the office. I traded options and he traded futures. So it was a different skill set. And he would trade 4 or 5 different markets at the same time and he'd be spreading one off against the other. And And I kind of was this was probably 25 years ago. I was like getting really bogged down trading options. And I said, I want to trade futures. And he said, well, come sit next to me. I'll teach you. I hadn't got a clue what he was doing. So it's really quite incredible. We came from the live floor. We were both sitting in the same office, both trading derivatives. And yet I literally couldn't understand what he was doing.
What do you think it was about those phenomenal traders, though? Was there anything that, if you were to look at them, anything that correlated to their success?
I think they just had a sixth sense about the markets. Phenomenal discipline, that for sure. Yeah, this particular guy that I'm thinking of, he would trade big size. He could be up or down a 5-figure sum in seconds, minutes, but he would cut so quickly if it was going wrong. He just didn't waste time on a losing position. Bang, out, next opportunity. I think that's probably, super disciplined.
Do you think that tolerance to risk as well makes a big difference?
Yeah, but I suppose what it was is he trusted himself to cut. He wouldn't be like, 5 minutes later or, 3 hours later going, God, I've still got this position on, what shall I do? He would be bang, out. So
that's interesting, because there was a podcast guest I had on, Dr. Chris Caffey, and his main thing was in regards to trade ideas, like generating new ideas, constantly having a flow of ideas for that, one of those purposes being that, so that when you either take a loss or cut a trade, you have the next idea to flow onto. Not so that you're over trading, but just literally that you have ideas that are ready to act on should they be in the optimal position to be in. And it sounds like a very similar thing. So like he was ready to not get tied to one idea because that's the only idea he has, realizes that one's not working out, cut, move on to the next one.
Yeah, I'm actually talking about the floor days here. So he was a market maker in the pit, and so he was more of a scalper anyway, and he was a futures trader. So he would be there. I'll start doing hand signals now because it's just a natural thing to do. Yeah. But he would be, he'd buy 1,000 futures, and then if he took half a tick or a tick on them, he'd be happy because he instantly made like $10,000. Yeah. So he was trading very big for small margins.
But it's just so interesting how it's a different time. See how that different time I was talking about a different one, but thankfully I've been able to interview people, as we just said before we started, who have been in the pit. So I got a greater insight than I probably would have if I had come here without interviewing them, because it's so interesting, as you say, like that. It was a whole different edge in itself in the pits, right? Like the edge was more so inside that room, inside that pit.
Correct.
Because you would be. How this person described it was like the order flow. How people look at order flow now with the level 2 charts. Essentially, the order flow was just in the room then, because all the orders would flow through that pit. Yeah,
it was a very. You had to be in tune with your senses. So it was visual, it was audible. You if you wanted to, you could just stare around the room and try and spot brokers on the phone who were looking at their guys in the pit, and they'd be saying, what's the size? Oh, it's 4.5. Okay, we'll sell 1,000 at 4, and then. I think I didn't really do that so much, but some traders would actually look for those orders coming in. And then, obviously levels of noise would surge when, say, there was unemployment number coming out. I mean, that was really exciting.
I can imagine.
First Friday of the month, 1:30 p.m. And there's like, it's a big moment. And then everyone goes, shh, like 30 seconds before, shh. And then people would start stamping their feet. Oh, and then bang, the bell rings, number comes out, and then all hell breaks loose.
Chaos. Yeah.
Absolute chaos. And that was very exciting to be able to live in that environment.
I can imagine, yeah. And do you feel like, in one essence, traders just trading alone in today's day and age, like especially they come across it probably online, no interaction with a lot of other traders, they don't really know many other traders in comparison to those days where everyone's that environment, and almost that it's kind of a sense of community, even if everyone wasn't friends or anything.
Oh no, it was a big sense of community. And I was thinking about this recently. Yeah, you're absolutely right. Anyone can be a trader now. In those days, you had to go to the floor or whatever. Anyone with $100 can open a trading account and be a trader instantly. But it is lonely, you're right. Trying to find, and this is something I try to do. I try to bring people together. In fact, I'm arranging a meeting on Sunday for my followers and my subscribers just to all meet up. And just talk. Usually at these meetings, they come to meet me, but they all end up talking. So it's a really good event. But, sorry, what was I going to say? Yes. So on the floor, you're totally immersed in financial markets. because obviously you are talking to people. Did you buy any of those? You long vol or you short vol? Where do you think the market's going? What do you think the unemployment number? You go out for lunch with the traders. You're down the pub with the traders in the evening. So you're totally immersed in financial markets.
When you first stepped foot on the floor, like this very, very, very early days, like this first few days, how did you take to it? Was it something that you were drawn to straight away?
I was terrified. Well, when I was 19 and I got my first job, it was with a brokerage company, and I didn't know what was happening. They said, okay, turn up on whatever it was, Monday at 9 o'clock. So I'm in there in my brand new pinstripe suit. I didn't know what I was going to do. The next thing they go, right, come with us. And we're leaving the building. I was like, oh, where are we going? Walk across London Bridge. And the next thing I'm on the stock exchange floor, and I'd only seen that on TV. And I was like, wow, wait till I tell my dad I'm on the stock exchange floor. I couldn't believe it. So then I was there every day it was called the London Traded Option Market. It was a very early derivatives market, which was just trading stock options. Anyway, 1987, the year that I started, 6 months later, stock market crash, volumes dried up. I lost my job. And then I got taken on by a market-making company still on the LTOM, on the stock exchange. But eventually I progressed to LIFE, London International Financial Futures Exchange. And that was a completely different atmosphere. It was really intense, very aggressive, very loud. And even though I'd been in financial markets for 2 or 3 years, it was a whole new experience. And I was absolutely terrified. I didn't know how I was going to do it. They were far more into the hand signals, and it was a lot more people in the pits. It was very noisy, and I just thought, how am I going to learn these hand signals? They were so quick, and eventually, obviously, I did it. I transitioned a lot. I mean, there was lots of transition periods for me because how technology developed.
Yeah, I can imagine. And during that period, though, how lenient or how much leeway did they give you to catch up and learn?
Oh, none at all. You don't walk into a pit and everyone goes, oh, look, there's a new trader. Come in, what's your name? Right, listen, we'll help you make some money. They're like, okay, who's this idiot? We'll destroy him. They're there to make money, not friends. And they weren't polite. It was very aggressive. It was every second word was a swear word. If you screwed up, they would bury you. It wasn't like go easy on him. He's only been here a week. It was like, if you can't make it, you are out. And people did go within days. And then there was all the pranks as well, which made you feel like a complete idiot in front of the pit. So you really, I literally had to become a different person, because I came from a public school, well-spoken, quite timid, and you're down in this environment with, really aggressive people. They called them Barrow boys, East London guys and all that. And they were razor sharp. And I thought, if I don't almost become them, I'm never going to survive. And you just you're in this world and you start to become this person. I was swearing like a trooper, go out and I would come out of this environment, but I would still be that person. So I'm going back to my friends and I'm just this cocky, mouthy trader.
What pushed you to, elevate yourself to be able to stay in that realm, if that makes sense? Like what? Because as you mentioned previously, like a lot of people don't survive. Like they'll be there a day or two, they will not hack it and they'll be gone. But you've still trading to this day. Like what pushed you in that environment to do that?
I was really determined to succeed. I suppose a lot of people are. I have a huge fear of failure. I wanted to be successful. I'm not materialistic. I don't own many big trophy things to show that I've done well financially, but I have a fear of failure. So every single day, even now, I don't need to work, but I'm up at 6 and I'm looking at the markets, and it's just my life. It's just who I am. Couldn't not do it. I'm trying to force myself to work less and be less stressed, and that's a real challenge. I can't seem to do it.
Where do you think that stems from? Is there anything that sticks out to you?
I don't know. I think it's just who I am. I think some people are just like that. I mean, I'm not massively wealthy, the billionaires, and I think to myself, why do they still get up and do that? I met a guy a couple of years ago, lived in this huge house, ex-banker, obviously worth an absolute fortune, and still trading, and probably up and down 100 grand, 200 grand a day. Clearly didn't need the money. And I thought to myself, why is he still doing this? If he makes 100 grand, it's obviously not even going to make a tiny bit of difference to his life. Why is he putting himself through it? But he obviously just couldn't leave it alone.
I think some people are just wired differently, and they love the work that much and they enjoy it. But as we said, it's like this. It's almost like an addiction to the markets as well, which can be healthy or unhealthy depending how you treat it, for sure. But in terms of one thing you mentioned there, the fear of failure, I found that very fascinating because obviously in trading, there's this really interesting thing that goes on where you lose a trade and naturally, especially early on, naturally you assume you've failed, you've done something wrong. So how did you handle that? Is that fear of failure always been there, like been in sort of the mindset?
Yeah, I think it's something that happened. You know, my father was quite successful, and then when I was 16, lost everything. I think that was the trigger to make me go out and think, right, I'm gonna. I actually, the trigger was I need to go out and save my family because we've gone from having a nice lifestyle to absolutely nothing, and I don't think that's ever left me. So that's probably the psychological reason for it. Yeah, I mean, we all have losing trade. When I started trading, I did all the stupid things that everyone does, especially when I transitioned to screen trading, not using a stop loss and all that, you know, and I learned by trial and error. You know, when you lose significant sums of money, you think, right, either I give up or I stop doing this, I figure this out and learn how to control myself.
It's interesting, though, in terms of making that transition, because a lot of the pit traders that I spoke to so far, they stopped. Like their edge was in the pits and therefore... And I feel like maybe they were that involved in the pits that they believed that they couldn't find an edge outside of it. So therefore they chose to sort of essentially semi-retire or move on to different things. What pushed you to make that transition and sort of pick up the electronic trading?
I had nothing else to do. Let me see now. Let's say it was around 2000. So I was about 32 years old. And what was I going to do? I wasn't wealthy enough to retire. Some traders were wealthy enough to retire, and some of them should have retired. They had 7, 8, 9 million and they blew everything. One of the most successful traders on the floor was called Terry Crawley. He made more than anybody. He was so smart. The day the floor shut, he stopped trading and went and did something else and made a second or third fortune doing, I think he bought every house in Kent or something and made another fortune doing property. So there's so many different stories. But I think for me, I was just like, what else am I going to do? And I was an options trader. So that transition for me was actually easier because on the floor, you don't have a calculator and you don't have time to, so you've got to calculate your delta, your theta, your vega, and all that's going on in your head every time you do a trade. And then you've got to get your hedge and you've got to think, okay, the market's moved. How's my gamma affected this? What's my deltas now? So you're constantly doing these mathematical calculations in your brain. And I was so quick at maths. When we'd go out for dinner, it'd be like 14 people, the bill was this, and like, how much is it each? I'd be like, bang, it's this much each. And everyone, you know, but that quickly goes when you don't use that in your brain. Right now, I can't do simple maths for toffee. But sorry, I've gone off on one. But when we started trading options on screen, it was amazing. You click a button, you buy a call spread, and bang, everything, all the Greeks are updated. You know exactly what your gammas, your thetas, your deltas, what your hedge, how much you need to hedge. So in some ways that was easier. There was a different skill set that you had to learn.
That's interesting, actually. That's interesting because, like you say, like that mathematics, keeping track of the orders as well, was a difficult task, I imagine, especially in those chaotic times, and especially when the markets were really, really moving. Because one thing I got to learn about was like carry trades, where essentially, you know, you're doing an order at one person, but the person right next to them thinks you're doing it with them, and therefore there's this random order that's just in the ether that's taking place, and they would have to sort of essentially come to some form of agreement the next day, or someone would have to take the trade.
Oh yeah, there was always an out trade, but
that was the one. So out trade,
an out trade. Yeah. Oh, I had an out trade. So back in early 90s, there was an election, and the Tories were expected to lose, and Labour was expected to win. So it didn't happen. The reverse happened. So the reaction in the market was crazy. And before the markets even opened, the floor was packed. And short sterling, I traded short sterling, so that was LIBOR 3-month UK interest rates. Now, I didn't find out until about 5 minutes before the market opened that I had an out trade from the night before. I was like, and it was the wrong way, of course. I had to buy 100 futures on the open, and the market was up 100. So I was down 100 grand before the market even opened. I was like, I don't know, let's say I was 22 years old. I'm in a blind panic. So anyway, that's my big out trade story for you.
How did you handle that sort of situation?
I had a boss at the time who was financing me. So his name was Roger. He was in Chicago. I had to call him at 2 a.m. And I woke him up. I said, Roger, I'm down 100 grand. The market's not even opened. He goes, okay, it's going to be a big day, massive volumes. He said, I'll cover the loss. Just get in there and trade. And so I did. And by the end of the day, I made the 100 grand back.
Wow.
Yeah, it's crazy.
Was that not like a common occurrence in terms of the size, but more so like those were the mentality of the traders? Like you might have gone into the market with a loss, but you then have essentially a target to smash that day. Does that make sense?
Yeah. I don't think we set ourselves targets. I mean, these days traders are so much more disciplined, and you know, I'm a mentor, I'm a coach, so I teach people, right, you know, have a day limit where if you lose X amount you stop, and when you hit your target you stop, and all these controls that you have for risk management, trade management, account management. We didn't have any of that in those days. No one had even thought of it. You know, you just went in there and you traded. You know, mindfulness and mental health and everything, it just didn't exist. You know, you never let anyone know how much you were suffering mentally. And we probably all were. The pressure was intense. I'd go home often, sit in my kitchen with the lights out, staring out into my garden, which was black, and just completely, you know, and all these trades are going through my brain, you know. But you know, now if you have a bad day, well, you can just switch the screen on and hide behind the screen. I had to go into the pit, and I had to pretend that I was full of this confidence and I hadn't lost any money, because I might be short a load of vol, and you know, the markets were moving and the volatility was creeping up, and I had to buy it back, and I had to pretend that I was happy that vol was going up. All these stupid spoofing things that you used to do. Well, really inside I'm like, God, I've just lost another 50 grand this morning. What am I going to do?
There's a lot more intensity.
Yeah.
A lot more intensity to the day-to-day.
Because if people saw the fear,
yeah,
then they'd be like, he's short vol, we can squeeze him.
Yeah, exactly. Exactly. That's what I meant about the order flow being in the room, is that you're reading the emotions of the other traders too, to sometimes dictate your order, especially if you're one of the traders with the large size. Because one of the people I interviewed from the Chicago pits, he was responsible for 10% of the volume on the S&P.
Wow, really?
So like he was literally doing that all the time, where he's just looking at traders.
Intense.
But one thing he found interesting was that, and that he mentioned, was that because he had so much size, there would always be these like, not newer guys, but guys with maybe like smaller bankroll, smaller size, who he would kind of like feed orders to and allow them to sort of just fill some small orders off him.
Okay.
Just because he had that much size. And
right.
It's just incredible. Like even just hearing your experience as well, like there's different insights, like that different intensity level that traders really wouldn't take on board today, because they just wouldn't understand it. Like they feel intense. And I guess it's the level of your perception. And it's not saying that the markets aren't intense now. They still are.
Oh, gotcha.
But like that, the level of intensity that you would have to go through day to day, as you say, like having to keep your, you know, a very straight face when going into the markets, regardless of the scenario.
It's a poker game every day.
Yeah. Versus now it's kind of just people by themselves with their screens. And even then, when they take a loss, they feel a certain kind of way.
Yeah, it's a good point. We were doing more than just playing the markets. We were playing each other. We were spoofing each other. I mean, often I'd say to my mate, you know, we kind of form alliances, and we were like, you know, you long vol, yeah, I'm long vol, I think we can squeeze this, what do you reckon? Yeah. And you just start, you'd be like bidding it, and you'd be like, bid half a tick higher, has anyone hit me? No. Okay. And then you're just constantly gauging the pit. Well, I think they're short, I think we can push this, and vice versa. They do that to me. It was great fun, and when it worked, it was great. So not so great when it didn't work.
Definitely. What was that transition into like more technical analysis, based trading? What was that process like for you? Let's take a break for a minute there, guys, because I want to tell you about one of our sponsors, Alpha Capital. Now, without our sponsors, it's not possible for us to host such incredible podcasts around the world and get the level of guests that we are getting. So again, thanks to Alpha Capital for sponsoring the podcast. Now, Alpha Capital is one of the best prop firms in the industry. So far this year alone, they have done over $50 million in payouts, which is absolutely incredible. They have the very best infrastructure in place for longevity, from an in-house broker, so they can offer the very best trading conditions and platforms that all traders love to use. They're still able to offer services to the US as well, so the US traders can still trade with them on particular platforms. They have institutional experience, so they know how to manage a prop firm correctly and have such an incredible team on hand. On top of which, they have both a pro and swing plan. So depending on your style and strategy, you can choose which one is best for you. Now you can use and get the highest discount available at anywhere using Riz25. So that's RIZ25 for 25% off all challenges. The link's in the description below. So So let's get back to the episode. Let's take a break for a minute there, guys, because I want to tell you about our sponsor, TradeZeller. TradeZeller is the #1 trading tool for all traders. It doesn't matter whether you're a crypto trader, a futures trader, or a Forex trader, whatever trader you are, all you do is connect your trading platform directly with TradeZeller. It automates and makes your trading journaling so easy. If you want to be a profitable trader, you need Trading Edge, and that is exactly what TradeZeller does. It allows you to identify edge, maintain your edge, and optimize your edge by automating your trade journaling, in-depth analytics, back testing, bar replay, and so much more. Now, WOR gets you 20% off your yearly subscription with TradeZeller, so use WOR for 20% off your yearly subscription, or Riz10 for 10% off your monthly subscription. The link is in the description below. Now let's get back to this episode.
So after trading options on screen, it became very tiring because with options, you're constantly married to a position. You can never be completely flat. So every time I went on holiday, I was never really on holiday. My brain was in the markets, and I had some horrendous holidays where I had to jump on a plane and fly back. And
Really?
I was just like, wow, I've been doing this for, let's say, 20 years, and I'm exhausted. I just want to be able to trade futures, make some money or lose money, shut it and go home and bang, start the next day. So I started trading futures, and I thought, well, I've been an options trader for 20 years. How hard can it be? You either buy the bund or you sell the bund, and it either goes up or down. But it's a lot more to it than that. So I quickly lost 30 grand of my own money, probably around 2005, 2006. And I realized, okay, I have no idea what I'm doing. This is a complete new skill set. So I either keep going and probably lose more money, or I quit and try and find a way to get an edge. So then I got into technical analysis, and I went traveling and I read tons of books. But, you know, you can read all the books in the world until you start applying it and finding a process and finding a strategy. So it was a long process, but that's how I got into technical analysis. And then I fell into providing technical analysis for banks and brokers. I was living in southern Spain, and a guy that I knew set up a brokerage company. He said, why don't you come and work with me? And, you know, I wanted to take a break from trading. I think it was around the same time. Yeah, I was studying technical analysis. So I went and worked with him as a broker. And then I sort of let people know that I was studying technical analysis, and they had clients like big bank clients, Deutsche Bank, Morgan Stanley, you know, those kind of guys. So I started telling them, oh, look, you know, I'm looking at a chart and I think this could happen and that could happen. And this developed into a service for the brokers. So I ended up doing less broking, and I was just pumping out the levels all day long, and they found it useful because they would use my levels to hedge their option books. And then when I left, they were like, we want this service, we'll pay you. So I ended up developing this signal service for brokers, and now I do it for retail traders.
What was that like in terms of that transition? Because I don't know if you've seen, but in like the retail space, a lot of traders on more these influencers offer signals.
Yeah.
But is it the same as that, or is it different? Like they're offering signals in terms of, let's say, like, you know, buy here, sell here, stop loss here, TP here, etc. Is it a similar thing, or are you more just presenting levels of interest?
I try to teach. I call it earn while you learn. So I have a Telegram group, and I get carried away. So I probably give too much information, but I'm constantly posting charts. Look at this pattern or this trend, and this is what I think, and this might turn into a head and shoulders and blah, blah, blah. So I don't think people read half of what I put in there, but some people do, and they learn. And then I provide a spreadsheet of trade ideas at the bottom. It's all color coded. So with all my levels, there might be 15 trades on there in a day. 4 or 5 of them might only get executed in a day. You know, if I execute 5 trades and 3 are winners, we've had a great day. And I do that every morning. And yeah, it seems to work. I've had subscribers for years. So we do make money in the long run. Obviously, I have losing days, losing weeks, but generally we do make money.
What are your thoughts to trading patterns? Because over the years, as you can imagine, it's always been a debate. Ever since I think electronic trading in particular came around, it's probably always been a debate in terms of what styles work. And I've had, not only have I had traders on the podcast, but even like books, when you read like Market Wizards, for example, these phenomenal traders, but they're very polarizing their views. Like, one might be just pure fundamental trader, thinks technicals are a waste of time, can't be possible. But then also the next page or the next chapter or the next trader that you read about is the complete opposite side of the spectrum. Pure technicals, fundamentals are useless, you don't need them. Then obviously there are the few who blend the two, and there's just so many different options when it comes to how to trade and what to trade. What are your thoughts with patterns? Because one thing people say in terms of patterns is is that the markets can't respect them because they're not going to, the pattern's always the same and it can't be that easy, and they're too easily recognizable, and therefore the market makers always after you. They're always going to try and hit your stop loss and so on and so forth. That's someone who uses patterns in your analysis. How long have you been doing that? Has there been longevity in that?
Yeah, I think there is. The patterns I use are pretty simple. Bull flags, bear flags, head and shoulders, which is less reliable, but when it works, it really works. So I don't ignore it. I think that with the experience that I've got, I've kind of got a bit of a sixth sense of when to use it and when not to use it. Like, here's a great example. This week, I think it was Wednesday, there was a huge bearish engulfing candle in gold and silver. So if you were a pure technical, you'd be like, oh, bearish engulfing candle, right, markets are going to collapse. But I'm like, no, we're in a very strong bull trend. It probably means we're just going to trade sideways for a bit. I'm not taking this as a sell signal. I'll still be a buyer on weakness. That ended up being the right call because I think gold broke high this morning, new all-time high.
Yeah, exactly. Yeah. So just for context for the audience, it's the 20th of September now, or it's the let's just check. Yeah, it is exactly. I guess that. Wow, it's the 20th of September now. Yeah. Wednesday was FOMC. They just cut 50 basis points for the first time in
big
all
week.
Year or something. Yeah, and gold sold off. A lot of the currencies sold off, but then, as you said, all have rebounded. Which is fascinating. So was it more so just in terms of, you classed as 6 cents before you said it, but really was it more so like we've been in such a strong bullish trend and you've noticed that?
Yeah,
so one candle.
Yeah, exactly. One candle doesn't change it for me. It would be a warning, but there would have to be a pattern for me to say, okay, the trend has changed. So yeah, there's a lot of experience that is drawn into this. And I couldn't write a book and say, right, A, B, C, do this on every pattern or it's just something that's in there. So if people want to learn to be technical traders, I would just say spend as much time as you possibly can in front of the screen, looking at charts, drawing your trend lines, because trend lines are trial and error. Even now, I'll put a trend line on and go, no, that doesn't look right. I'll do that again. So yeah, it's experience. You might be a gold trader, but don't just look at charts on gold. Look at charts on absolutely everything. While you've got a trade on, have a look at as many different markets as you can, and just keep analysing and analysing and analysing, because you don't realise it, but you're slowly building this sixth sense. And I compare it to driving a car. I could tell you exactly how to drive a car, easy. You put it in gear and your indicators and mirror signal maneuver and how the traffic lights work. But and you could go, wow, this is great. I can do that. But until you get in a car and you're on the road and you're dealing with traffic, it's the experience that then you become a good driver.
Yeah. So like when you first start learning, it feels a bit daunting. You're overthinking things. But then once you build that experience up, it's like second nature. It's like you get in the car and you start doing it automatically.
Yeah.
And do you think that's where your wealth of experience really comes in then, when it comes to your market breakdowns now and your trading now, is simply the fact that you've been on the markets that long, transitioned through the markets and the different ways to trade, from the pits to the electronic, from options to futures. Are you trading futures still, or is it Forex, CFDs?
Mostly Forex, gold, silver, oil, and then Forex and Dow, Nasdaq and S&P. Those are ones I focus on. I don't trade all of them every day, of course, but I look for signals in all of those markets. So I'll trawl through all of them every day, as many Forex pairs as I can, and then I'll just try and find opportunities where I would be prepared to take a risk.
Amazing. And what are you looking for in terms of style of trades, or is it scalping? Is it day trading, swing trading?
I'm mostly swing trading. I'm 56 years old. I've been doing this 37 years. I don't need to sit in front of a screen all day, trading, nicking 5 pips, 10 pips. And of course, if you're scalping, you don't need my service. You can just sit and scalp away happily. So I'm looking for low risk trade opportunities where I can risk 25, 30 pips, looking for 40, 60, 90 pips profit. So at the moment, because volatility is relatively low compared to the last 4 decades, so you're going to have to run a position overnight, sometimes 2 nights, in order to see it play out. Yeah. The days of seeing the euro move 100 pips a day are long gone. So yeah, that's my strategy. I'm a trend follower, very simple. I'm a trend follower. I can do quite well when there's a decent trend like there has been in gold. Gold's been a great market for me. Sideways markets, I just pull my hair out. And unfortunately, the dollar's been in a sideways trend for probably 2 years. I can't make sense of that at all. I barely touch the dollar anymore. So yeah, I buy at support levels in a bull trend, or I buy on a break above a resistance or a previous high. Very simple.
How important has that been for your trading in terms of keeping it simple?
I think it's really important. I think every technical every technical analyst, when they start and they're learning, you end up throwing every tool on your screen. MACDs and this and that and Ichimoku clouds and Bollinger Bands, and of course you then have to filter it all out because you realize this is way too much information, and then you what they call it, the KISS strategy. Keep it simple, stupid. I think everyone goes through that. I mean, all people that come to me, all my students are like, yeah, I've tried everything, and so you get to a stage where you whittle it down, and mine's dead simple. It's trend lines, it's moving averages, it's Fibonacci's, it's candle patterns, candle formations, trend following. I look at the slow stochastic. That's it. Yeah.
Would you say when using those, is there a certain set number of confluences you need to tick off before a trade is sort of valid for you?
I think I have a 3 in my head for some reason. I like it. I feel confident if, we're in a bull trend, we've pulled back, there's a confluence of fibs, and there's maybe a 100-hour moving average and maybe a trend line. If they're all coinciding, I'm like, wow, I have to do this. I mean, as traders, we have no idea what's going to happen next. I have no crystal ball. I don't know what's going to happen next. So all you can do, as you said, is find an edge. And then when you find that edge, it's your job to execute the trade and see if it works. And as long as you're risking less than you hope to make, and all the rules that we know about, then over time you should make money.
Do you feel like there's a lot of traders out there who share a different mindset in the sense that they are constantly searching for something that will allow them to know where the market is going to go?
Oh, absolutely. Yeah. You think there's this holy grail where you'll be able to tell. And people, when they start, they think that trading is all about guessing the right direction. And they say to me, where do you think gold's going today? And I have no idea. That's not what I do. I'm long gold. What should I do with it? I don't know. If you, and I say to them, why did you buy it? Oh, I just thought it was going up. Well, where's your stop loss? Oh, I don't know. Like, okay, you're not trading. You're gambling. You're buying something because you think it's going up. You've got no exit strategy. You don't even have an entry strategy. Okay, fine if you're gambling. It's like if you like going to the casino, if you like going to the horse races and you're doing this for entertainment, absolutely fine. But don't fool yourself that you're trading, because you're not. You haven't got a clue. You've got no edge. You've got no strategy. So either educate yourself or just carry on having a little gamble.
Where do you think the mindset comes from for traders who are searching for that thing that allows them to know where the market's going?
I guess it's naivety, because they haven't got any experience, obviously, if they're thinking along those lines. If they're thinking that the key to trading is guessing the right direction every day, then they don't really know what they're doing, because that's not a strategy. So I think it's just, educate yourself and find out what traders do. Read Market Wizards or whatever it is. You talked about that earlier. What do successful traders do in order to, how do they get an edge? What is their strategy?
Do you feel like a part of it as well is it feels illogical to trade if you don't know where the market's going to go?
I think it feels illogical to trade, to just jump in, just to randomly and spontaneously jump into a market. I mean, I did it, obviously. I did it like everybody else. I messed up big time, and that's how I've got to where I am now. But yeah, that's how we all start out. The thing is, this is something that's really key for me. So as a trader, you want to have some sort of certainty, because the markets are so uncertain. That's what kills humans, not having certainty in life, in whatever aspect it might be. So the only way you can get certainty, like how am I going to progress as a trader? How am I going to consistently make money? Is if you have a strategy that is reliable, or no strategy is 100% reliable all the time, but my strategy is reliable when the market is trending upwards or downwards. Then I know that I can make money. Now, the only way to really understand your system and optimize it is when you've got a data set of trades. So I've done 10 trades, right? How have I done? I've done 20 trades, 50 trades, 100 trades. Then you can start to analyze it and optimize it. You can't analyze something if you're just jumping in randomly. Where are you going to be in 6 months' time? Well, you haven't got a clue, because you don't know. You don't even know what your strategy is. So how can you possibly know where you'll be in 6 months' time? So whereas if you have a strategy, then you say, right, okay, well, I've done 3 months worth of trading and I've done X amount of trades, optimize it. Should I be running wider stops? Should I be more aggressive with my targets? Should I, limit myself to 5 trades a day? Am I over trading? You can break it all down. There's so many different ways to break down your strategy and try to optimize it. But of course, you can't do that if you don't have a strategy.
So you have to collect that data.
Yeah.
Without that data, it's hard to ask questions and to
so
refine.
how can you improve?
Was that something, though, that was more on the electronic side, or was that still an element even in the pits where you'd be tracking your trades?
It really wasn't, and I probably should have been. But no, that was random. But then I was an options trader, so I wasn't really trading direction so much. I was trading vol, and you're trading spreads, and you're trying to take and you have the edge is actually being in the pit, buying at the bid, selling at the offer.
So it was a different era, and especially the market was the dictator of that. But what is it, do you think, about traders that aren't collecting data? Do you think it's just laziness?
I just think it's probably they're getting started. They don't really understand what they should be doing in order to progress, and some people do just genuinely love trading because they get a buzz from it. So and there's nothing wrong with that. If you're getting excitement from it and that's what you want, crack on. But if you're like, no, I want this to be a second revenue stream, or I want this to be my profession, or I want to make a living from this, I want to build wealth, then you're not doing it properly. And be honest with yourself. Where do you think you're going to be in 6 months, a year? You haven't got a clue because you don't really know what you're doing.
It's interesting with that, because I think there is a lot of people who maybe are misguided in thinking that they want to be traders, but they really are just loving the buzz, loving that feeling that the market gives them, but they're not treating it correctly. Because as you mentioned there, like in terms of the journaling and collecting data, some people might be new and therefore they don't know better. They need to sort of get their foot in the door before they get to that point. But there's also traders who are trading for the last 5 years, still not collecting any data and wondering why it's not going right.
Oh, people contacting me every week. I've been doing it for 3 or 4 years, and and I say to them, okay, so give me your entry strategy in a nutshell, just your entry strategy. How do you identify a low risk trade opportunity? And they're like, I kind of look at the trend, and if it's going up, I'll buy it. And I'm like, that's not an entry strategy. You've got to break it down.
Do you think you need to be specific in what you're doing?
Really specific. You should be. I think to be a successful trader, and I'm sure if you read Market Wizards, and you probably know better than me because you've interviewed some phenomenally successful traders, and I haven't. But for me, it should be robotic. This is why people create algos, because it removes the human element, it removes the emotion. You should be able to say, right, there's an opportunity. Where should I place my stop loss? Where should I place my target? Okay, does that fit in with my risk versus reward? Am I risking 1 to make 1.5 or whatever it might be? And that's it. It should be robotic. You should know exactly why you're going to enter and at what price. You should know exactly where you're going to get out if it goes wrong. You should know exactly where you're going to get out if it goes right before you even execute the trade. So there shouldn't be any emotion at all in the actual trade. Once it's executed, it should be, okay, let the trade play out. The only thing you should be doing is maybe trailing your stop if it works. So, okay, some people add to a winning trade, but if that's part of your strategy, that's fine. Okay, the gold's gone to 26.08 or whatever it is today, breaking to a new high. I'll add to the position, fine. But you're doing that because that was part of your plan. We all know the saying, plan your trade your plan. Yeah, that's really important.
Being in the markets for as long as you have, you've seen so many different all-time highs, right? Essentially price discovery. You've seen so many times where prices entered that no man's land and there's no levels to work off. Just as you said with gold, just as last week has done it multiple times. How do you trade in those environments? What do you look for? Or is it a case of sitting back?
No, those markets work for me because, as I said, I'm a trend follower. So gold is probably the easiest market for me, has been for a while. So it's broken to a new high. Simple. I'll just buy some and I'll add to it. If it keeps going higher, I'll use Fibonacci projections for targets. That's it. It's dead simple.
I love that. Because I think the reason why I like that so much is so many people overcomplicate. They assume as well. And I think sometimes traders can be guilty of listening to other people's limiting beliefs or whatever their beliefs may be. It might not even be limiting, but just their belief is.
Yeah, because they're looking for someone to give them that holy grail. I think everyone thinks that someone else has figured it all out and nobody has. Yeah.
So that's like, there's benefits to having a community. There's benefits to knowing other traders. More so, I would say, for accountability purposes, for people to have understanding. Someone to discuss with someone who understands what you go through in the markets. But equally, I do see there's a lot of negatives too, such as those moments where you people easily rely on that person's opinion, relies on that person's thought process versus their own. How important do you feel it is for a trader to have longevity in the markets, to focus purely on what they're seeing and what they know?
Oh, 100%. And also, half of the rubbish. I'm not on these forums. I never have been. I was already a very experienced trader when all this started coming out. Yeah, so I don't listen to anybody else. But I did learn, don't listen to other people. And half of what you probably read on there is rubbish anyway. People are probably just making stuff up, and there's a lot of egos probably involved. I don't really know, but I would imagine so. No, you can't listen to what other people think about the market. Nobody knows. You have to have your strategy that works for you, and your strategy might not work for someone else, because strategies are also based on your lifestyle, how much money you've got, how much time you have to trade. You know, a guy that can only trade in the morning before work would have a different strategy to a guy who's scalping all day, or, you know, whatever, or a guy who's able to monitor the markets and look at them for 10 minutes every hour, you know. So your strategy has to be very personal. So you really got to figure it out for yourself.
A part of trading, I think, that really does that I think has an impact, direct impact onto traders' results, is how well their routine is and how structured their routine is. You know, what's that been like for you? Can you walk us through like the sort of routine you've sort of followed for the markets and your trading? Yeah,
well, for the last whatever it is, 15 years that I've been providing the service that I do, I'm up at 6, 7, and I'm straight on the computer. That's the first thing I think of when I wake up. You know, how have my trades done? How has my service done for my subscribers? So I don't go and have a breakfast and a coffee or a walk. I have to go and see what the markets are doing, and then I'm just immersed in it. You know, I'm so interested in it. I can't help it. I'm going down rabbit holes everywhere and posting charts on my Telegram groups, and this is what I'm thinking. And then, yeah, after a couple of hours, I'm pretty much done. To be honest, after that, I'm quite lazy. I keep an eye on the markets, but I know I'm done. I'm not going to find a load more opportunities, because I look at the 1 hour. I've mostly focused on the 4 hour chart. And as I said earlier, I'm a swing trader. So I probably have to hold positions for 24, 48 hours. So what happens after that isn't massively important. I might look at the screen 2 or 3 times during the day and update my subscribers if I see something important, but after that I've almost lost interest, if I'm honest.
Do you set like limit orders for your entries? Yeah,
it's all limit orders.
Yeah, and then therefore you don't have to do anything, just let them take place.
Limit orders, or buy on a break above or sell on a break below. So it's buy stop to enter, sell stop to enter, that kind of thing. Mm-hmm. So yeah, I'm either trading breakouts or I'm trading support and resistance.
Mm-hmm. So very much hands off in terms of the execution, but obviously hands on when it comes to the analysis.
Yeah, and I think you should be hands off when it comes to the execution, because I said earlier, plan your trade your plan. So for me, all the work is done in the analysis. Right now, as I said, I might have 15 trade ideas, but less than half of them could get executed. Which is fine by me. The majority of my trade ideas don't get executed. The price never gets there. But if the price does get there, I think we've got a good chance of making money.
Definitely. And in terms of being a swing trader, especially across so many markets, how much weight or how much are you looking at fundamentals?
Oh, yeah. That's something I really take into account. Actually, there was a period when I didn't, because I do believe that markets lead fundamentals. So how could I explain this? I tell you, probably one of the biggest examples was the global financial crisis of 2007, 2008. If you go back to it on the S&P, there's a huge head and shoulders pattern building that was built. And it was obvious to anyone who knew about head and shoulders patterns that the market was going to crash if we broke the neckline, which we did. So that wasn't anything clever. It was just basic technical analysis. But I was telling Deutsche Bank, Morgan Stanley, Merrill Lynch, we've got this pattern and I think the market's going to crash. What could trigger that? And they were like, well, nothing really. There was nothing on the horizon economically. But when you go back at it, the stock markets are already trending down, because that's what a head and shoulders pattern identifies, the fact that we've got lower highs and lower lows. Yeah. We're already building you put a label on it and call it a head and shoulders pattern. But all it is, we're now getting lower peaks and troughs. So already, the market was dropping, and it was just a question of, would it accelerate to the downside? Would people trading on margin be forced to liquidate and whatever? And that's what happened. So sorry, I've gone off on. Oh yeah, so I do, but I studied economics at school. I did A-level economics, so I was already aware of fundamentals. And when you're on the trading floor, you have to, everyone's talking about, what do you reckon for GDP? In those days, it was the trade balance. That was the big one. Unemployment wasn't really a big number. Nowadays, of course, inflation is the big one, and then unemployment. Inflation, we never even bothered about in those days.
Has it always been the case where like certain news reports will be the leading, impactful thing?
I think so, and they can be for a long period of time. Obviously, when inflation started taking off, what was it, 5 years ago? I can't really remember. That became the main number because, of course, that was driving Fed interest rate policy. But inflation was tame all through the 90s after Volcker in the, was it 70s? Once they got inflation under control in the 80s, no one paid a blind bit of notice to it because it was constantly around 2%. And the interest rate moves got down to 0, a 0.25% moves. 0.25% moves are normal now, but in the 80s, 0.5%, 1%. I remember going out for lunch, probably having a beer, and I think we had pagers in those days because we didn't have mobile phones. Someone's pager went, I won't swear, but someone went, Bank of England's just cut or hiked whatever 1%. We were tearing up the stairs of the escalator. I was ready to vomit. By the time I got to the stairs, I'm pretty sure I'd lost a ton of money. 1% move, but that was normal in those. And they didn't telegraph it. They weren't like, we're considering doing an interest rate rise. We're concerned about inflation. It was. They didn't communicate these things to the market. For some reason, they thought they shouldn't communicate these things to the market. So the whole approach is completely different from central banks now.
That's interesting, actually, you bring that up because I didn't think of that. So before, would you say a lot of the meetings that are now very public, pretty much live streamed on YouTube?
They were private. They didn't want, for some reason, they didn't want the financial markets to know what they were thinking. And they do a surprise cut. Maybe they thought it would have more impact on the currency or whatever if they didn't.
Or just safer, maybe.
Yeah, perhaps.
Less panic, even though, if anything, it could have caused more panic because it's a shock.
Yeah.
But it's interesting how, as technology has gone along, we get more access. And I think a lot of traders kind of may even take it for granted because it's just always there.
True, even on Twitter. You really only need Twitter to be keeping up to date with minute by minute. It's crazy because, of course, on the floor we only had one Reuters screen and we were at a disadvantage to all the guys who had the Bloombergs and everything up in the desks. So often they would be ahead of us by 30 seconds. They'd come in, dump a load of vol on us or whatever it might be, sell a whole load of calls. Market would then, by the time we're doing our hedge, the market collapsed. We're like, what the hell's happened? Oh, bang, so and so said something or
And in terms of risk-wise per trade, so when you're looking at swing trades, what are you looking at in terms of risk? Are you looking at dynamic risk, fixed risk?
I believe that I'm just bog standard risk 1%. If you then have 5, 6, 7 losing trades in a row, you're not down in enough money to sink you or panic you. If you're risking 5% and you have 6 losing trades, you're down 30%. That's going to crush you. How are you going to get back from that? So for me, trading is all about just confidence. I call it mental capital. Maintaining your mental capital as well as your monetary capital. You've got to be able to wake up in the morning and feel confident and go to bed at night and not be stressing and thinking, how the hell am I going to make that money back tomorrow? So just slow but steady wins the race.
Have you noticed, in terms of people protecting that mental capital, there's a lot of traders who trade when they don't have, they're trading money they can't actually afford to lose, meaning that they could afford to lose it and not maybe be completely, having zero left. But it's money that they don't have savings. So it really, if you were to do it properly,
to work.
If they lose it, it just means that they're going to have to go back, save some more, put it back in the market, and they end up in this cycle.
Yeah, it's not a good state of mind, is it?
Do you feel like that? It's a lot of traders would probably perform a lot better if they were to focus on getting themselves in a stable position first. Doesn't have to be absolutely massive, like super secure, like a 12-month cash buffer, for example, but at least get some months in the bank and then be trading with money after that point. Definitely. That can essentially be classed as money they can afford to lose. Yeah,
it's a really good point. What's the saying? Scared money makes no money or something like that. I'm not sure if I've got that right. But of course, if you're trading because you're desperate to make money, or if you're fearful, you're definitely at a disadvantage. You need to be confident. And that goes back to my thing about, trading robotically and planning the whole trade out and, eliminating the emotion. Because okay, let's say you're in a trade and you're desperate to make a profit, then you've identified, and even if you're doing everything right, you've identified the trade opportunity, as I've said, you've identified your stop loss and your target. You're like, right, I'm ready. I've got my trade plan. I'm ready to trade the plan. Bang, you're in. The market's going up. You're like, this is great. We've bounced right off my support level. We're heading towards my target. Right, I'm up $200. Then the anxiety sets in. You don't just get anxious when you're losing money. You get anxious when you're making money, especially when you're in the position that you've just described. Right, I'm up $200. I really don't want to see that $200 evaporate. And we've all experienced it. You're up, you're down, you're up, you're down. Watching the P&L swinging about. And then the anxiety builds. So if you don't have a plan, you'll end up jumping out. You'll be like, I need that money. Bang, I'm out. And then, of course, the trade keeps going in your direction. Oh, God, I could have made 500. Then the frustration sets in. And then it's revenge trading. And then it's FOMO. And it all kicks in. And it just goes horribly wrong.
Mm-hmm. And it's just a cycle then from that point, which then is doomed to repeat itself, no doubt.
Exactly right.
Until the work is done. Going back just quickly to the fundamentals thing, I thought was very interesting what you said. So you think that fundamentals really is just priced in, essentially. So like, let's say if something negative is happening fundamentally, a lot of the time the technical aspect will be already indicating that fundamental in some sort of way.
I really do believe that. I've seen a lot of instances of it, and I gave you that example already. Yeah, I certainly have seen a lot of that. I'm sure lots of people would disagree. I mean, we can't prove it, but that's my feeling. Yeah, I think a lot of the time, not probably all the time, but the price leads the fundamentals. Because how often do you think, why is this market still going up when it should be going down based on economic statistics or something like that? I mean, I think the dollar should be sinking at the moment. Clearly, we've had a very aggressive interest rate cut. Clearly, the economy does seem to be slowing somewhat. We know there's a $35 trillion the debt in the US. It doesn't make for a strong dollar, does it particularly? But I think everyone's short the dollar because of that, and it won't go down. So there's other factors as well.
You've seen a lot of elections in your time, no doubt. And how often do you see that whoever is voted in has an impact on the markets? And you see conditions change based on policies that are set?
That's a good question. I don't really have a good answer for you, if I'm honest. It's not something I've given a lot of thought to. I don't think politics, especially in the Western world where there are democracies and there are central banks that govern interest rates, and I don't think they have a huge impact. Yeah. Obviously, it would be different in a dictatorship.
Only when we had Trump. He was the only one.
Yeah, well, that was really interesting, wasn't it? Because everyone thought Trump would be an absolute disaster, and then he won unexpectedly. Initially, the markets collapsed, but literally for like minutes, and then bang, they were off, never looked back. So that was fascinating.
It is fascinating, though. He's trying to come back. He's trying to make a comeback now.
I think he'll do it.
Yeah, it'll be interesting to see. It seems like there's a lot of forces against him to try and make it not happen. But I was saying, as a trader, I'd love for him to come back just because he brought so much volatility.
That's
and fun.
So true.
Especially as we were talking about Twitter. He was the king of Twitter at the time.
You're so right. Those were great days for traders. We went from Obama, and markets were so stable. It was just so boring to Trump, which was terrific. Yeah, I've forgotten that his daily tweets moving the markets and stuff.
It was crazy because he'd say like one thing 1 minute, and then like a couple hours later he'd say the complete opposite thing, and the markets would literally be like this.
That's so true. Yeah, gosh, bring him back.
Whipsaws.
Bring him back.
But in terms of like traders you've seen, as you said, you've worked with traders, you've taught traders, you've seen traders progress. Is there anything that really stands out to you in terms of something that a lot of the traders you've seen progress and start to see profitability in the market? Is there anything that stands out that they've done differently to those who haven't achieved that result?
Probably just emotional control and not over risking. Keeping the account under control, risking small money, just the stuff that we all know. Use a stop loss, control your downside, don't risk too much, don't overtrade, don't jump in spontaneously. Just stuff that everybody knows now. I mean, this stuff wasn't out there when I was learning to trade. We all learnt by trial and error. And that isn't something that we talked about when we would go down the pub, or it wouldn't be like, now, how are you handling your discipline? How much do you risk per trade? Because we didn't do that anyway. So this is something that new traders, the resources that they have to learn, just amazing. I mean, there's so much free stuff out there. There's no excuse for not understanding the rules of trading.
I think an element of an issue that traders have is that they have an abundance of information. So
True.
therefore they overwhelm themselves. They don't know who to listen to.
That's a good point.
But equally, as you say, though, the rules. That was interesting how you said that, though. It's like the rules of trading have remained the same regardless.
Yeah, every game has its rules. Whether you're gambling or whether you're playing football or whatever it is, every game has its rules. But the problem is you have to set the rules in trading. So when you go to a casino, okay, you're playing blackjack. Or let's say you're playing roulette. Right, you bet on red. Okay, I put $10 on red. The ball, right, no more bets. So that's the start of the game. And you can't change your bet. And it's, you know what, you're either going to win 10 or you're going to lose 10. There's no other outcome. The ball goes in the wheel, boom, boom, boom. You either win or lose. End of game. Right, take your money off the table. Next game. It's all very controlled. You can't lose an unlimited amount in a non-specified time. It's structured. With trading, there is none of that. Markets, well, crypto's open 24/7. So if you're trading crypto, when does the game start? The game starts when you enter the position. The game ends when you exit the position or when you've blown all your money and the broker closes your account. So no one's going to say, right, stop, the game's ended, you take your money off the table now. There's an infinite amount of income, of outcomes over an infinite amount of time. So the only control you have, you can't control the markets, you can only control your reaction to the markets. And unless you've got that set of rules and unless you've got that strategy, it's all going to come undone.
Do you have any rules that you have in place for when you go into a losing streak or a drawdown? Is there any changes that you make?
No, and I should, but I'm very disciplined. So I know that I'll only risk 1% per trade. And I know that if I have 5 losing trades in a row, I'll only be down 5 or 6%. And I know I will get that back eventually because I always do. I have losing streaks, but then I will have a winning streak. Yeah. But I think it's a really good idea to do that. And there are all sorts of different ways to do it. Some people cut the size down and then they'll cut the size down the more they lose, and then when they finally get a winner, then they'll start adding to the winner. Anyway, I'm not going to go through all the different strategies, but I think it's a great idea to examine that if you're a trader.
No, definitely, because one of the interesting ones is people may cut, because I think everything has pros and cons, right? Regardless of what decision you make, because when you cut, one of the issues is that when you win, you'll probably have a lower size to begin with as you recognize you're back into a winning streak.
Right.
But again, it's a pro because you're taking less of an emotional toll as you're on the way down.
Yeah,
too. So
and I think that's really
sides.
key. The emotional toll is really important.
Do you think, though, because you have the data and the experience of knowing that, okay, on my average losing streak probably is this amount, I've seen this
maybe
X number of times already, so there's nothing to stress about. So therefore, being able to handle your emotions through those losing streaks or drawdowns is a lot easier than it would have been maybe originally. Because you've seen it so many times. Yeah,
actually, that's probably a good point, which was a bit in my subconscious. But I'm at an advantage. I'm at the end of my career. I don't need to make money. I'm trading for fun whenever I'm trading. I'll have $10,000 in an account. Even if I blew the whole lot, it wouldn't change my life.
Yeah.
I would never stick 100 grand in and get totally immersed in it. So yeah, I'm kind of lucky. I'm not starting out. I'm not trying to make my money. I'm not trying to build a revenue stream. So, and I do have all that experience. So it's different for me.
Can we finish up on the story that was mentioned, which was there was a time when you made $1 million or $1 million in profit within 4 days. Can you break that down for us?
Yeah, it was 1992, and I was in the thick of the short sterling pit, and so there was something called the exchange rate mechanism, which was inflation was out of control at the beginning of the 90s, certainly was in the UK. So the UK Chancellor thought it'd be a great idea to peg the pound to the Deutschmark because the Germans had their inflation under control, no problem. But the issue was that there were different economic cycles. Germany was expanding as it came out of the unification thing. The wall came down, so their economy was growing. Our economy was shrinking. So what we really needed was lower interest rates and a lower pound. Their Deutschmark, they wanted it quite high. Anyway, whatever. So it was the wrong time to be pegged to the Deutschmark. But the governments being governments, they can't be seen to do U-turns. So they had to say, no, we believe in our policy, even though it was obvious it was the wrong policy. So they kept this facade up for a long period of time. And interest rates kept creeping up. And eventually they got to 15% because they had to force the pound to stay in this range with the Deutschmark. And of course, people like George Soros realised it was unsustainable. The economy was just going to tank, and they'd be forced to leave the mechanism. So they kept selling the pound. So anyway, this all blew up one week, and I was trading interest rates. So we were getting we were getting interest rate jumps of like 1%, 2%, 5%. It was crazy. So the market was all over the place. And I just happened to be in the right place at the right time, and I was making like 250 grand a day. I was only like 23. It was like free money. There was just so much volume. If you knew what you were doing, it was almost easy. I'm not pretending that I was, so amazing. And I had a backer who gave me unlimited money, so I could literally be like buying 500 puts at 3 pips under intrinsic value sometimes. So I made £1 million in 4 days. And by the 5th day, I was so exhausted. We were all exhausted. I couldn't even speak. I couldn't get the words out. I remember coming in on the Friday morning, and everyone was just like, it was a lot quieter. And I was like, should we go for breakfast? And then we just all went home. We were just so exhausted. So it's pretty crazy. Yeah, I made £1 million in 4 days. But actually, obviously, it was an amazing thing to do. But for my trading, it was a really bad thing, because having made that kind of money, I couldn't go back to just trying to make £1,000 or £2 in a day. So I was constantly swinging the bat, looking for the 5-6 figure sums, and they rarely came after that. So yes, I did make a lot of money, but my trading really suffered for a number of years before I pulled myself together again and I was like, come back down to earth.
And that was just simply because of you're seeing such a huge rise of, as you said, like it was so easy to make that money. Did it just feel like your mindset wanted to replicate?
Yeah,
that
it was just pure greed, and to make a 4-figure sum just seemed so small; it didn't seem worth it. So it was arrogance, and this is something that happens to traders. That if you make a lot of money at an early stage, which is probably down to luck, I think it can be really detrimental to your trading career.
Do you think it's also detrimental to generally when you're back into society as well? Like even if you leave trading or still trading, where you get this lack of respect for the money in a sense.
Yeah, that's a really good point. Actually, I didn't have respect for money. I'm quite lucky because I'm quite frugal. It's just my nature. Like even now, I live a very, very normal life. I mean, I live in Thailand. The car that I drive is a 15-year-old truck. I look like the poorest man in Thailand. I just can't be. There's nothing. Why buy a new car? I'm over that. I have a Ferrari, which is in England, and I was so flash in my 20s. I don't deny that, but I'm over it now. So I have a pretty normal house, and for me, a great day is going for a nice long walk and having a decent lunch and maybe a beer before I go to bed. I don't need to be in a flash motor or flying first class. But so sorry, I've gone off on off subject there, but yeah, I think it is important to keep. Yeah, you've got to keep your feet on the ground, and if you do have a big win, remember it's probably luck. I think, well, there was a saying on the floor: I'd rather be lucky than good. And yeah, we all need a bit of luck in trading. In fact, I saw something really interesting on a TikTok or something this morning. This billionaire was being interviewed, and he was very humble. He said, the interviewer said, "What's one of the keys to your success?" He said, "Well, one of the big keys to my success is just luck. I was born in San Francisco. If I was born in any other city in the world, I wouldn't have what I have now." He said, "I'd probably be in jail." So it's really interesting. Appreciate that you've had some luck, and don't think that you're just this wonderfully intelligent person.
Yeah, so like just being grateful, having gratitude, and recognizing as well. Because I think I think some of the best and most phenomenal traders, if you really look at their P&Ls, it's like they had certain circumstances, certain moments where they were able to position themselves well to make that P&L, which you could class as luck, right?
Yeah.
To be, have the right size available, be there at the right time, with the right volatility and the right circumstance.
I was in the right place at the right time, just happened to have the right tools at hand, and then I got arrogant and greedy, and it screwed up my career for a number of years.
But you fought through. What was it that helped you to get out of that that'd probably be a good place.
Realizing I
for us to finish
better make some bloody money again, because £1 million doesn't last that long.
off. Yeah.
You know, there's some tax to pay on that and blah, blah, blah. Fortunately, I was smart enough to buy some property and do some clever. I mean, I did some stupid things. I bought 2 Ferraris. And then after 2 or 3 years, I was like, what am I doing? These are depreciating. Sell them, start buying houses.
Yeah.
So I did that. So I got into the property.
Amazing. So do you feel like it was like when your back was against the wall, the lessons were there for you to just take them on board? And
Yeah, I had to really regroup and get real. And
do you think that moment then really is what's allowed you to have such a long career though? Because you had that big moment, you had those struggling years, but then it was like the lesson necessary for you to have longevity. Because if you didn't learn it, you would have just kept maybe going through the same thing.
yeah, I guess that's probably true. I hadn't really thought about it, but yeah, I guess that's true. Yeah, I suppose I'm a survivor. You know, I will keep going.
We love that. We love that. And hopefully we'll catch you again here on the podcast.
Yeah.
We need to get you for like a round table or something. We love doing round table
Oh, that would be
podcasts.
great fun.
So
Yeah.
it'd be amazing to try and get that in. But Jason, thank you for being here. Thank you for sharing
Thank
everything with us. Your links will be in the description below, everyone. So make sure you check them out. And drop a comment of your biggest takeaway from today's episode. I know there was so much. But there'll be other episodes on screen. So make sure you check those out. And until next time, everyone, take care.